If you were to just look at the stock market these days, you might infer AI as an industry isn't doing so great.
A roller coaster ride. Global stocks headed for their worst week since April.
Let's head to Wall Street, where the Dow ends another day in the red, down nearly 500 points.
Now, perspective, right? All the panic right now is over a relatively small drop compared to, say, the drop we saw when Trump's tariffs slammed headfirst into the global economy.
Reciprocal tariffs on countries throughout the world. Reciprocal.
And especially compared to the absolutely bonkers growth we've seen in American stocks since the launch of ChatGPT 3 years ago. Which, yes, we can correlate these two things, stocks and AI, because, and this is crazy, more than a third of stock value on America's main stock index, the S&P 500, comes from just 7 tech companies, all heavily invested in AI. But that little crest of the mountain, is that a hiccup towards more gains or the start of a downward slope? It has the world wondering if we're about to see a big pop of the AI
Bubble.
AI bubble.
AI bubble.
Because it's not just sky-high stock market valuations that are making everybody's minds go. You also have to follow the money and how it goes round and round in circles. So let's make this real. NVIDIA wasn't always the most valuable company in the world. In its earliest form, it was known more for powering graphics cards in gaming computers. So 20 years ago, a partnership with Sony felt like a big deal. But a major evolution was also underway, using its high-performance chips not only in graphics processing, but increasingly in general-purpose computing, raw math. And in a world that would soon find itself starving for this raw computational power, NVIDIA began to identify much more lucrative markets: data, generative AI, the kind of horsepower it had spent 30+ years building and refining in these tiny chips. Now, the company's worth well over $4 trillion US because its supercharged chips power about 90% of the world's AI projects. But as NVIDIA's value kept climbing on the stock market, investors started to wonder how the company was spending its money and whether some of its investments were actually genuine investments at all. I can explain by way of example. Imagine SpaceX announces a massive $100 billion investment in Crayola. Classic synergistic partnership between rocket engineers and children's art supplies. This investment inspires Crayola to develop, jet fuel crayons that can color things by themselves. So this is an investment that creates new value. Shareholders get excited, SpaceX and Crayola see their stock prices shoot up. But in NVIDIA's case, back in September, it pledged $100 billion US to OpenAI, the makers of ChatGPT. But guess where these kinds of large language models get their processing power? That's right, from NVIDIA chips, which OpenAI has agreed to buy or lease using the money received from NVIDIA in the first place. So, as the stock price of both NVIDIA and OpenAI continues to go up and up and up, at least partially on the heels of all of this movement, money, momentum, the question investors are asking, is NVIDIA simply paying itself?
So it's essentially giving a customer money to exclusively buy your products. So it's not really fair to call it an investment. It's really just a way of kind of forwarding money to your customer so they in turn can come back and buy your products.
I won't go through each and every single deal between each and every single company because other news organizations have done a lot of that reporting. This is Bloomberg's analysis here. And NBC has done a very colorful treatment too, where you can see just how tangled the web can get. These tech and AI companies, so interlocked financially, their speculative value so high, who knows what any of them is really worth?
It creates the illusion of something that's not entirely true, which is to say a company is dominant. Well, it's dominant because it's giving customers money to buy their products.
Goldman Sachs figures these so-called circular deals will account for somewhere around 15% of NVIDIA's sales next year. And when you think of it from OpenAI's point of view, its total company valuation right now is somewhere around $500 billion, give or take. An investment of $100 billion from NVIDIA That's already a massive share of its overall worth and supporting a company that doesn't actually make any money.
Vis-a-vis the Wall Street Journal, OpenAI plans to lose $70+ billion in 3 years.
And this is where you can get into trouble, because circular investments fueling wild speculative stock growth, that's not necessarily a problem, so long as the people pouring money in are reasonably confident of getting their money out. But there is such a huge gap between investment and revenue, where OpenAI has spending commitments worth more than $1 trillion, but it's not even profitable, and not everybody's confident it will soon find a way to be profitable, with the notable exception, of course, of the company itself, which is constantly trying to convince investors there's hope. Except, even if you set aside the astronomical cost to train something like ChatGPT, where you can spend $40,000 just on a single NVIDIA chip, multiplied tens of thousands of times over, with hundreds of millions more spent on power, cooling, real estate, these massive data centers, which can be more like small towns. Like, did you know, for example, more money is spent these days building data centers than all other manufacturing facilities combined? Even if you set all that aside, we still haven't talked about salaries, research, or even just the cost of every single query a ChatGPT client makes.
The companies that make these AI models, which are called LLMs or large language models, are profoundly money losing, like just so impressively money losing. For the most part, they actually lose more money the more customers they have.
Experts tell us pennies to dollars on every request, eating more money the more people use them because of the sky-high energy demands. So at what point do people start to question, whoa, are we putting too much money into this? Is the AI bubble about to burst?
The idea that, at the other end, there'll be some kind of magical conclusion that justifies all the spending is what I call faith-based argument. It's like, I don't know what's coming, but whatever we do, it's going to justify all the spending. And it's like, well, fine, but you don't apply that logic in any other walk of life. So why should I listen to it here?
Ultimately, what drives the AI industry, powers it through hardship, is this promise of potential. That AI will give us automation, productivity, scientific discovery, better health outcomes, social outcomes, educational outcomes, the basis for entirely new industries.
To make this all work more broadly, they are still sort of telling the story of AGI, of a technology that is so versatile, so powerful, and so capable of many different types of labor that some way, somehow, it will pay for itself.
So, the thinking goes, there is no bubble here, only investment. Like, do we also think of building roads and tracks and bridges as bubbles because there's so much upfront cost with no return? Except, of course, there are still reasons to tread carefully. Unlike roads and rail, the billions spent building data centers don't have a particularly long shelf life.
Here you've just got giant structures full of thousands and thousands of chips that are just hot, working, and shortening their useful life. And on top of that, even if they weren't shortening their useful life, they become obsolete relatively quickly.
If I don't use a railroad for 5 years, it's still useful, right? But if I don't use a GPU for 5 years and it's sitting in a data center, it's a write-off.
So in a very important way, there is a deadline for all of this massive AI investment to generate a return. Fail to do that, the bubble pops and the stakes couldn't be higher.
It matters because we're already into the trillions of dollars, I argue, are being metastasized across the economy in a host of different forms.
Tech stocks represent almost half of the value of all American stocks. And American stocks, by value, represent more than half of all stocks on the planet. The world right now very much depends on its largest economy doing well. The so-called Magnificent Seven together, they're about the size of China's entire economy. NVIDIA alone is worth more than Japan. So if there is an AI bubble, it may not even need to fully burst for the consequences to be extraordinary. The world is invested in AI to an unprecedented degree, such that even a small shock could be very expensive.